Hi there. Are you one of those people who have been looking for how best to invest their capital but have been unable to find a suitable way of doing so? Guess what? Lead Capital has got you covered. With their impressive array of financial products and services, Lead Capital offers you the opportunity to invest your capital in a well-balanced portfolio that offers you financial security and growth. With the Lead Fixed Income Fund, your capital is invested for a minimum of 90 days. But guess what? You can be assured that your money is exposed to very low risks and your dividends are paid out biannually. They also have a Lead Balanced Fund that exposes you to slightly more risk than the Fixed Income Fund. However, this fund also offers you biannual dividends, greater returns, and a minimum holding of 90 days. Also, if you are looking to secure your funds from the depreciations associated with the Naira, Lead Capital has a dollar fund that helps you invest your capital in dollar instruments for a period of 180 days. However, they pay out your dividends biannually in dollars. And if you are a big-time Odogu looking to invest a serious amount of money, Lead Capital has also got you covered. With the Lead Gazelle portfolio, you could invest a minimum of ₦1 million for a minimum of 90 days and begin to enjoy some impressive returns on your investment. Also, with an investment of $50,000 to $200,000, Lead Capital PLC offers you the opportunity to hold private portfolios with them, where your capital is exposed to medium risk, your coupons are paid to you biannually, and you enjoy the world of Eurobonds, where you could earn interest on your capital investment in various foreign currencies. For more inquiries, reach out to Lead Capital PLC today with any of the contact information displayed on your screen, or reach out to us via our website at www.leadcapitalgroupng.com. Thank you. Lead Capital PLC, your guide to financial security. Hi there. Are you one of those people who have been looking for how best to invest their capital but have been unable to find a suitable way of doing so? Guess what? Lead Capital has got you covered. With their impressive array of financial products and services, Lead Capital offers you the opportunity to invest your capital in a well-balanced portfolio that offers you financial security and growth. With the Lead Fixed Income Fund, your capital is invested for a minimum of 90 days. But guess what? You can be assured that your money is exposed to very low risks and your dividends are paid out biannually. They also have a Lead Balanced Fund that exposes you to slightly more risk than the Fixed Income Fund. However, this fund also offers you biannual dividends, greater returns, and a minimum holding of 90 days. Also, if you are looking to secure your funds from the depreciations associated with the Naira, Lead Capital has a dollar fund that helps you invest your capital in dollar instruments for a period of 180 days. However, they pay out your dividends biannually in dollars. And if you are a big-time Odogu looking to invest a serious amount of money, Lead Capital has also got you covered. With the Lead Gazelle portfolio, you could invest a minimum of ₦1 million for a minimum of 90 days and begin to enjoy some impressive returns on your investment. Also, with an investment of $50,000 to $200,000, Lead Capital PLC offers you the opportunity to hold private portfolios with them, where your capital is exposed to medium risk, your coupons are paid to you biannually, and you enjoy the world of Eurobonds, where you could earn interest on your capital investment in various foreign currencies. For more inquiries, reach out to Lead Capital PLC today with any of the contact information displayed on your screen, or reach out to us via our website at www.leadcapitalgroupng.com. Thank you. Lead Capital PLC, your guide.
Okay, good morning, everyone. Good morning to all our lead investors. We appreciate you and thank you for taking your time to attend this program anytime we call on you. This morning, again, we're going to take a look at equities markets under this outline, and then thereafter, we also take a clue from what also transpired in our fixed income market to our expectation, and then what are the actions and what should we be doing as investors across those various market instruments. In the course of last week, equities market for the entire 5 trading days, the bull dominated 3 out of 5 trading days. Bull was able to have a very good outing for 3 days. On Tuesday and then Wednesday and Thursday, market witnessed remarkable turnover because it was the first time Dangote Cement, one of the highly capitalized stock, even the most capitalized stock in the NGX market, over 8 trillion in terms of capitalization, MTN over close almost 6 trillion. Those two tickers, they did remarkably well last week. Of course, if you look at our top five stock in our Monday top five picks, we actually recommended Dangote because we've seen some renewed buy interest in that tickers. So last week, for the entire 5 days, market was able to witness 3 out of 5 trading days. It was positive. It was also on Friday, we saw some moderation and a profit taking in the equities market, which is more of a correction. That is also expected in the equities market. And then from time to time, we'll continue to share volume charts of the activities in the equities market. And if you look at all our previous presentation, financial services has always dominating the equities market. Last week, 58% of transactions were also dominated by financial services, which is a combination of banking stocks and insurance companies, because results are now filtering into the market, are also encouraging valued investors to take position. Investors usually consider performance, and then you see repricing of some of those tickers when results coming into the market are also very encouraging. It's an opportunity for those who want to take position because the future of such tickers is brighter when they are posting a good result, looking at those important variables across board. So last week, market witnessed, the ASI witnessed an uptick of almost 2%, likely driven by activities around Dangote Cement. For the last week, Dangote Cement gained 21.8%. MTN also gained almost 3.56%. And then we also saw some tickers like a Better Glass, but also from under industrial segment of the market, also gaining 10%. In fact, it was the first time in the last 3-4 months we are going to see major expansion in the NPS in industrial index, recording over 10.38% because of the movement, strong position taking in Dangote Cement. So if you now look at our ASI, week on week, ASI gained 2%, and then our year-to-date return also moved higher to about 4.98%. ASI now closed 108,053.95 basis points. So the surge was quite remarkable because of activities around Dangote. If you want to look at the trade turnover, of course, the trade turnover was lower than what we did last week, the previous week. But in terms of the market expansion, in terms of the all-share index expansion, we could see more buy interest is now coming into the market because results are now coming into the market. So looking at market capitalization, we are currently at 67.242 trillion, and then the ASI still stood at 108,000. It has also moved about our predicted 105,000, and we're also expecting that our activities continue to move in the market. The ASI is likely to cross the 110,000 threshold. So because results are still going to filter into the market, we haven't seen results from the companies that are under our recommendation. So I think those reports are also coming to the market. We're likely to see more buy interest because what we have seen across board are also very encouraging. So market is expected to also move further than what is currently trading. So the Stanbic IBTC right issue is closing on 21, which is 30th of, on Friday of this week. So we're encouraging all valued investors. We'll continue to update this slide so that you can see that if you're also trading your right, if you are using the part of your holdings to also fund this transaction, you are still at a positive of almost 27.72 gains, which is quite remarkable. So for those who want to fill their form, we encourage you to fill your form and submit before the due date so that you can benefit. We've seen what transpired in Access Bank, Fidelity Bank, GTB, FCMB, and Zenith Bank, and Sterling Bank, and the First Bank. So if you look at the price gain, you can see Access Bank almost 42%, Fidelity Bank, that's almost 100%, GTB 42%, the same thing FCMB. So tickers, companies that are also looking very promising, when we do our analysis, we'll continue to recommend them. So the case is still the same for the Stanbic IBTC. So don't be left out. Fill your form and send it across to us. All the key metrics around Stanbic IBTC's performance are favorable and they present good entry price. So if you are buying at 50 kobo, 50 naira, 50 kobo is a good entry price. That's also is trading as a discount. It's like a giveaway. If you are looking at it, that you are also calling almost 27.72%. So fill your form and then submit to our customer service so that we can process your application. And then for the final year expectation, we are still maintaining our position on some of the companies, tickers that haven't released their dividend results to the market. Of course, for the banks, they are still undergoing regulatory approval. The central bank, we've gotten some information in the market that a couple of banks have submitted their board that have met, and then they have also approved the account, but the central bank also need to approve the account. So for the Access Bank, we are still encouraging you that analyzed dividend yield has also gone to 28.81%, ETB 28.76%, United Capital, UBA, Stanbic IBT, Zenith Bank, ICOS, Custodian, Master Insurance, Name Insurance, Dangote Cement has also moved up. West African Portland Cement, Okomu, we've seen their results. Presco, we have also seen their results. Arade and Total. So investors that really want to take advantage of the good dividends expectation, or you want to receive cash dividends this time around, so please take advantage of the current market price of this stuff. Prices are not likely to come down soon, because the result of the companies that are also filtering into the market is propelling investors to also take more position. Everybody wants to ensure that all these tickers form part of their portfolio. So we encourage investors that this 1 to 16, they are also good for investors that are interested in getting dividends from some of these companies. So please take advantage of the current market price of some of these tickers. For our recommendations for the week, we've actually sent out 49 stock recommendations this week. We are also going to, this is just an extraction, 1 to 33. We are going to see our recommendation cutting across various sectors: the banking, the insurance, the industrial, the consumer, even the telecom as well, even the agri. We'll continue to place tickers that have demonstrated good performance in our buy recommendation. If we look at 1 to 23, Access Bank, First Bank, FCMB, GTB, Sterling Bank, 1 to 23, there are other stocks that have been included in our 1 to 49 list of recommendations. It's just an extraction. You will see when you open your email, and then you can also take from a clip from that. From 1 to 23, in this extraction, in this presentation, we're encouraging all lead investors to take advantage of the current market price. They still present good entry price. While 24 to 31, we're also placing them on hold. The likes of Airtel Africa, Name Insurance, Master Insurance, Cadbury, Nestle, Eternal Oil, Presco, and Oema Bank. While 32 and 33, African Prudential and the Girigo, we also place them on hold, on sale, because they are trading. We see those stocks as overbought, because from time to time, we look at the key metrics, and we also examine the relative strength index of every tickers we cover, to be sure whether such tickers is under or overbought region or undersold region. So some of these tickers, they are in the overbought region. So in that, because of that, African Prudential and Girigo, we are also placing them on hold, on sale. So we encourage you can sell them. While 24 to 31, we're also placing those tickers on hold for this week. And then on our daily market report, we also send out when we also see news to change this rating or remarks on some of these hold or buy or sell. We will surely do that, so that from time to time, you can be active in the market, you can take advantage of the movement in the equity prices on every daily trading days. But our recommendation is that investors should stick to this recommendation. If there is this for you to get clarification in the areas that are not clear, please feel free to interact with us at RM level, at customer service level. We'll be willing to infer and to provide solutions in such a way that your investment decision can be properly guided, so that at every point in time, you see value creation and the value addition in your portfolio. Our expectations for the week: last week we saw a number of companies coming to the market, and a notable one is Nigerian Breweries. Of course, their transaction in terms of revenue, they're over 1 trillion. But when you look at the bottom line, of course, they made a loss because of foreign exchange transaction. But if you look at our recommendation, we still place it on buy. We're going to discuss more on that, probably when time permits. But the good thing is that last week, market witnessed remarkable performance, because our share index as at Thursday crossed threshold of 109,000, which is also an important thing to also notice in the market. So we're also expecting results coming from some capitalized stocks. The big banks, we haven't seen some results in the market as well. When those results also filter into the market, we expect ASI, and then the market capitalization to still move up. We're still likely to see uptick. And then the index is also likely to cross 110,000 threshold in the short, within maybe probably in 2-3 weeks time when results are also coming to the market. So in this week, we expect ASI is also going to move, is going to close on a positive note because results we are seeing in the market are also very encouraging. And we believe they will still drive performance and they will still drive ESI into a positive territory. So this is the end of the equities market review and presentation. I'm going to hand you over to our in-house fixed income expert, Mr. Samuel Oladipo. Mr. Oladipo, good morning. It's time for the fixed income presentation. Over to you.
Thank you so much. Good morning. And good morning to all our esteemed clients for taking out the time to join us. Very quickly, we'll look at activities in the fixed income markets and projection for the coming week, for this new week. For the funding rate, we saw some level of stability in the funding rates as liquidity in the market remained relatively at the level it was last week. It is important to note that liquidity is still very squeezed in the market. I think market closed at a negative of around 700 billion negative zone. And as such, we saw that the the funding rates remained quite high at 32.45% for the open buyback rates and for the overnight rate at 32.80%. We expect that this week, we don't expect so much to change this week as we have an estimated outflow of roughly about 1.5 trillion that will leave the system this week again. So we hope that sufficient inflows will be able to come in to moderate the negative trend on liquidity in the market. But for now, our projection is that the rates will remain elevated in the open markets. Now, for the treasury bills rate, for the treasury bills market, despite liquidity strain, we saw some bullish run, and that wasn't surprising. And I think one thing we've been very consistent about in our presentation is the fact that we expect a low rate market to be the dominant level this year. And as such, we've seen other players in the market also play in line with that expectation. Despite liquidity being at the negative zone of almost 1 trillion naira, both the treasury bills market and the bonds market they both closed on a bullish note, and also considering what happened in the equities market, you would have expected that the fixed income market would close on a bearish note, that is, it's going to lose value. But that was the opposite was the case. And one factor that points us to is the fact that rates are coming down. People in the market or investors in the market acknowledge the fact that the elevated rates currently available would not be the case for long. As such, they are taking position in as much as they can. And that was what we saw that fueled the bullish sentiment throughout the week. Throughout last week, we saw buy sentiment across with minimal sell-offs, but the buy sentiment actually outweighed the sell-offs, such that the market closed on a bullish note. And at the end of the week, we saw the average yields at the treasury bills market declined by 45 basis points, closed at 22.08. And we also like to continue to emphasize the need for investors to take decisions or to take positions. And now that we still have relatively good rates in the market, as this week we're expecting another NTB auction to take place, where 1.28 trillion worth of Nigerian treasury bills will be on offer. And if you take a look, take a clue from what happened at the last auction, where just 670 billion was on offer, we saw total subscription of 3.2 trillion. So we can imagine the level of subscription we are likely going to have this week, now that we have well over 1 trillion on offer at the next auction. And we can't overemphasize the need for immediate decision taking, or decision making rather. We can't overemphasize that the need for that, because we see rates coming down, and it would be just wise, it's advisable and wise for all rational investors to take decision or to take positions rather, now that we still have relatively good rates in the market. And looking at the bonds market, we saw that the market also closed on the bullish note, like I said earlier, following buy interest that we also saw, particularly at the short to the mean end of the curve. And one major factor that influenced the activities in the market last week was just expectation for rate declines. And we also saw, even in-house, we saw some improved activities of our investors who have keyed into our advice that rates are likely going to come down soon. As such, they should take decisions as soon as possible. It's the beginning of the year. As you're taking position in equities, it's also best that you diversify your portfolio by also looking at what is happening in the fixed income market, just to diversify and edge against future losses of the risk that you will be exposed to if you're only looking at one market. So on the tenor basis, we saw that both at the short to the middle of the curve and also on the long end of the curve, we saw a decline in yields. That's also point to the fact that the interest is not just skewed to one part of the maturities we have in the market. It cut across. While we see traders or individual or retail investors playing more at the short end, we also saw position taking, particularly at the 2053 bond, where we saw some institutional players also playing around that maturity. And at the end of the week, we saw that the average yields declined by 29 basis points to close at 20.10%. It is important to note that some 4 or 5 weeks ago, the average yield on the bond market was roughly about 23%, and now we've come down to 20%, which is an indication that we might have a lower rate in the coming weeks and the coming months. For our foreign exchange market, we experienced some gains some 2-3 weeks ago. But last week we saw a reversal of most of the gains that we've experienced as Naira crossed the 1,500 threshold at the official market. So closed at 1,509 Naira 70 kobo, as against the 1,501 Naira 61 kobo. Also at the forwards contract, I think on the 1-year contract, Naira closed at, okay, as you can see on the board, Naira closed at 1,800 levels. But at the end of last week, we saw it rising against 1,948. And we hope that we don't cross the 2,000 threshold again, because I think around the early December to mid-December last year, we saw the 1-year contract at around 2,000 Naira per dollar. We hope that the gains that we've earned over the few weeks ago would not be eroded in few months to come. But what does all of this points to? It points to the instability we still have in our foreign exchange market. And we believe that the ongoing efforts by the monetary policy the monetary arm of the government to bring about some form of stability would bear fruit in no distant time. But for now, the stability is still there. The instability rather, the volatility is still there. I'll continue to advise on our clients and bring them updates as to what the foreign exchange market is doing week on week. For our expectation for the week, as we've always emphasized, we expect that the rates will continue to decline, like you've seen in the past 2 months that we've been singing it. We expect that should continue for this coming week, particularly for the auction that is holding next week. That should also suppress the rates in the market. So in all of this, it's just best that our investors take decision as soon as possible without any further delay. And our various area of products are there for you to take advantage of, from the lead fixed income fund to the lead balance fund to the lead dollar fund to our Eurobond trades and for the lead Gazelle portfolio. Those areas of products are there for investors to take advantage of. Particularly the lead Gazelle portfolio, now that rates are beginning to decline, it's just best that we key in our investments, particularly for the long term. For the 365-day maturity, we are very confident that our rate is better off than the average rate in the market. And rather than keeping your funds in your savings account, in your current account in the bank, where it generates little to no returns, you can key them in an investment account such that your money continues to work for you while you engage in other activities. With this, we've come to the end of the presentation for this morning. If there are further clarity you require, or probably you have questions, now is the time for us to take that. You may use the chat box, or you signify by a raise of hand for you to ask a question. Okay, thank you. We have questions already waiting. Good morning. Why is Nigerian Breweries PLC still considered a buy stock despite the huge fire losses?
Okay, we place it on buy because if you look at the organization, I think it was around September, they were able to raise, they did the right issue, it was almost 500 billion naira, and it was 91% they're successful. So if you look at their financials of 2024, what actually constituted the losses is there are two major components: the increase in finance costs and then the exposure to the FX. But with the successful or the capital raise through right issue, we believe the Q1 of 2025 is the company performance will reflect a positive outcome, because they will have deployed those capital raised from the right issue to reduce the impact of their exposure to the foreign exchange, and their finance cost will also come down, and that will also save the company from the future currency risk. So we believe by 2020, the Q1 of 2025, we are likely to see positive performance in the P&L of that company. So it's a good buy, because within the valuation, it still favors those companies from various metric analysis. So don't consider what happened last year. Just look at the future prospects of that company. So we are confident that it's one part of our buy recommendation.
Okay, thank you. Do you foresee further stability in the equities market after the Q1's corporate actions?
Yes, one of the key drivers of the equities market is the performance. And now that the federal government is also very eager to ensure that they bring down the inflation. Of course, the Central Bank Committee of the MPC of the Central Bank, they are going to meet this week. And then in our expectation, we believe that they are not likely to increase the rate, because from the body language of the Central Bank or Monetary Authority, they are eager to bring inflation down to 15%, even though that is not achievable this year. But from all indication, they're likely to maintain the policy parameter, being the first meeting they're going to have for the first for the year 2025, while also considering what actually happens in the global front. So we believe that equities market will still bring stability, because inflation is going to come down, and there will be little moderation in the fixed income, which is likely to drive funds to the equities market. So there will be stability in the Q2, even the Q3. The only thing is that we may not really see an aggressive movement in the ESI as is witnessing in the Q1, because corporate actions of the banks usually come out in the Q1, but there's stability in the subsequent quarter as well.
Okay, before we proceed with the questions in the chat box, we have some hands up. Mr. Adewumi Okwemi, sorry, I'm not sure if it's Mr. or Mrs. Okay, Mrs. Adewumi Okwemi,
Okay.
you can unmute.
Yeah,
Yes.
good morning. Yes, Adewumi. Good morning.
Good morning, ma.
Yeah, good morning. Yeah, thank you very much for the expositions. Yes, I noticed that Fidelity Bank is not in the recommendation table. Is there any issue or
Okay,
any
ma, if
reason
you
for
have
that?
said it,
Fidelity
the one
Bank.
the 133 list we have, there's just an extraction. If you check your mail, we have almost 49 stocks that form our recommendation. But for this week recommendation, Fidelity Bank, we place it under hold. It's not by this week. So we'll continue to monitor activities around Fidelity Bank. But for this week, we place it on hold. So if you have not been getting emails from us, you can let us know, so that we profile you, so that we'll be receiving daily market updates and weekly reports from us.
Okay, thank you. Mr. Elvis. Mr. Elvis, you can unmute and ask your question, sir.
That's what I'm saying. Have you unmuted? Can I be heard?
Yes, please, you can go ahead, sir. Good morning, sir.
All right, morning. Mine is not necessarily a question. Mine is just an encouragement and a suggestion. First, I think I like this idea of having this conversation with investors and other stakeholders. I will only suggest that you try to send out the meeting link early enough. We can extend it to that you can be building up your portfolio, because I'm pretty sure for a few people who do not have an idea of stock trading, if they go through this elementary rudiment, will be convinced that it's a worthwhile thing. So let's try to get the link, even if it's 2 days ahead of time, and then probably some level of prompting that will help a lot. Don't forget, it's a Monday morning that it usually comes up, and that's a very critical or very important for every person or a business person. That's just to add. This should be my third session for attending this. I think so, and I think it's been helpful in my decisions about stock trading. And then I don't know if it's on monthly basis or bi-weekly, or I think that consistency should be established so that one can plan it as part of his program. Yeah, because there are Mondays I don't see it happen. So if it's on monthly basis, let us know that it's on monthly basis. If it's by weekly basis, let's know. And if it's on quarterly basis, let's know so that there can be some level of consistency. Yeah, that's all I have. Thank you very much.
Thank you, sir. We've noted all your observations. Thank you very much, sir. The program is weekly, and we started this program last year, April, and we've been very consistent. The only time I think we had it till the end of December. I think it was only the last week of December. That's when we ended the program for the 2024. But every Monday program usually starts 8:30. So thank you very much. We ensure you get the slide, and our IT will also take note of the sending the notices out earlier, and then we also send a reminder. So thank you very much, sir, for your observation and your contribution, sir.
Right. Thank you very much. We have another hand up, Chima Ejipe. You may unmute and ask a question.
Hello, good morning.
Okay, good morning, sir. Good morning, Chami. Good morning. Good morning, sir. You may proceed.
My name is Charmaine. Okay, I wanted as major lead recommendation in terms of stock purchase. Hello, did you get that?
Yes. I reiterate your questions. Mention about the recommendations.
That was okay. Please come again, please. Okay, maybe I think you have network issues.
I said I wanted to ask. I'm looking at your recommendation list in terms of stock purchase.
Okay. Okay, go ahead.
Hello, can you hear me? Can you hear me better now?
Yes, we can hear you now clearly.
Okay, I said I'm looking at the list for your purchase, and I wanted to ask: is there a main list of the stock recommended at majorly financial institutions?
Because majorly because the reason why I think I've said it. If you look at even the chart we presented, the performance of the market in terms of turnover, value, and volume, financial services dominated activities in our equities market. That's one. And then secondly, we are in the earning seasons. This is all the commercial banks listed in our market. They have uniform financial year of December. So this is the time results are coming out. So based on those two factors, that's the reason why you have a list of commercial banks or listed banks in our recommendation. But it's not only that. You also see companies that form other indices in our recommendation. But the truth is that our equities market is purely driven or majorly driven by the financial service activity. So that's why they form part of a list of stock in our recommendation. Okay, we've come to the end of this presentation. So we'd like to say thank you again to all our valued investors for taking your time again this morning to attend this program. So we'd like to say thank you once again. Do enjoy the rest of your day and have a very successful week ahead. So bye for now.